Hey everyone, welcome back to Corporate Decoder. Today we are diving into the semi-annual report of Macquarie Tax-Free Minnesota Fund. Think of it as a financial checkup with a few interesting twists about name changes and what it really costs to manage your money. We are looking at a document called Form N-CSRS, which is like a report card that investment companies give to their shareholders twice a year. This report is for the period ending in February of next year, 2025, and it tells us how well the fund is doing. The main goal of the Macquarie Tax-Free Minnesota Fund is to invest in municipal bonds. That is, bonds issued by cities, counties, and states in Minnesota, and that way they make sure the earnings are free from federal and Minnesota income taxes. That means more money in your pocket if you invest in this fund, but how much does it cost to run this fund? Now let's dive into what this report tells shareholders. This specific report is for the Class A shares with a trading symbol called DFFX, and the company wants to be transparent to shareholders. One important piece is a table of the fund's cost. This is always something people care about. The report looks at something called the fund's costs for the last 6 months, so they can figure out what were the costs of running the fund. The report looks at a hypothetical scenario. What if you invested $10,000? This shows that for Class A shares, the cost would be $41. So for every $10,000 you invest $41. So for every $10,000 you invest $41 towards covering the fund's expenses for that period. That equals to 0.82% of your in dollars. So for every $10,000 you invest $41 towards covering the fund's expenses for that period, that equals to 0.82% of your investment and is the cost of doing business. Otherkin the dollars you invest, said the report also gives us some other key statistics about the fund. For example, the fund's net assets are about $565 million. This means this fund is pretty big but not huge and manages a good amount of money. Also, the fund has investments in 320 different places. The total advisory fees paid to the people managing the money is around $1.1 million. Finally, the portfolio turnover and is around 1.1 million Baldy is around 1.1 managers are confident with those bonds. Next, the report talks about the fund's investment makeup, where the money is actually invested. In the sector allocation, most of the fund's money is in what are called healthcare revenue bonds, which equal 33% of what the fund owns. Next big chunk is in education revenue bonds at around 19%, with 18% in local general obligation bonds. So clearly healthcare, education, and local general obligation bonds. So clearly healthcare, education, and local general obligation bonds. So clearly healthcare, education, and local government bonds are most of the fund's money and is how it bets. ArtSim the fund also focuses on Minnesota, and VOYAGEUR fund also focuses on Minnesota, and the report breaks down the state and territory allocation. 95% of the fund is in Minnesota, with the other 3% in Puerto Rico. If you want even more information, the document states that you can go to a website for things such as the prospectus, financial information, holdings, and proxy voting information. Finally, it makes a quick mention of how shareholders will get communication and states that they can reach out to the company to change some settings, living on to the Class C shares. These shares are a little different. They have a trading symbol DMOCX. Remember how the Class A shares had $41 for every $10,000 invested? Well, for the Class C shares, this jumps to $78. The main reason why Class C shares cost you more is they carry a higher expense ratio of 1.57%. So it is almost twice the cost of Class A shares. The fund's net assets, the total number of portfolio holdings, the advisory fees, and the portfolio turnover rate are all exactly the same numbers as Class A. Also, the investment allocation based on sectors and by state is identical. This is likely because the money is being managed exactly the same way, with the only differences coming in the pricing. The report also covers the institutional class with symbol DMNs. Let's take a look at the numbers for this one as well. What is the cost of institutional class? Turns out it is only $28 for every $10,000 invested. It costs much less than Class A SU 41 and Class C 778. This equals to an expense ratio of 0.57%, which is way lower than Class A at 0.82%, or Class C at 1.57%, which is way lower than Class A at 0.82%, or Class C at 1.57%, which is way lower than Class A at 0.82%, or Class C at 1.57%. Again, the fund's net assets, the total number of portfolio holdings, the advisory fees, and the portfolio turnover rate are all exactly the same numbers as Class A and C. Also, the investment allocation based on sectors and by state is identical. You are probably seeing a pattern here, so it looks like if you are a big institution, you get a much better deal on fees. It pays to be big, doesn't it? Now, there's another thing this document talks about further down. The reports include the fund's financial statements and schedules of investments for each of the funds. It lists investments, assets, liabilities, and fund statistics. This is required by law and is for the SEC in the unlikely case of an audit by them. Here are a few key numbers from the Macquarie Minnesota High Yield Municipal Bond Fund Schedule. Education revenue bonds represent about $65 million worth of investment. Healthcare revenue bonds are big too, at about $92 million. The fund invests in electric revenue bonds such as Hutchinson Utilities Commission revenue and Puerto Rico Electric Power Authority revenue. Next up, the Dakota County Community Development Agency senior housing revenue shows a substantial investment sitting at around $92 million. The total investments are around $236 million F&L. For the Macquarie Tax-Free Minnesota Fund, it shows a significant allocation to education and healthcare too. Let's look at the schedule. Similar to the previous schedule, it lists investments in various sectors such as education revenue bonds. Healthcare revenue bonds show a big investment, and the fund invests in sectors like electric revenue bonds, similar to the high yield one. One thing that stands out is the Dakota County Community Development Agency senior housing revenue, another notable investment which indicates a focus on senior housing projects too, all totaling around $558 million. All of this is probably stuff that you would not ever read as a normal person, but is in the filling for legal purposes. The statement of assets and liabilities shows us what each fund owns and owes, which is always good to know. For example, the total net assets for the Macquarie Minnesota High Yield Municipal Bond Fund are about $2038 million. For the Macquarie Tax-Free Minnesota Fund, it is $565 million. This is how much money the fund has after subtracting all the liabilities. The report dives into financial highlights, showing key data per share for different periods. It's like looking at a stock's performance over time. It tells you how much money the fund made or lost and how much it paid out to investors, if anything. For the Macquarie Minnesota High Yield Municipal Bond Fund Class A, the report looks at the net asset value, income, dividends, and distribution ratios. Also, the portfolio turnover. For the tax-free fund, also the same, but it's broken down by Class A shares, Class C shares, and institutional class shares. Finally, there is a section called Notes to Financial Statements. These notes give you more information about how these financial statements were made. Things such as how the company decides how much the investments are worth and how it handles taxes. If someone is an accountant, this section would be much more important to them, but for normal people, there isn't anything here. Okay, so we have been through the numbers. What is going on? It seems to be a reasonably healthy fund. They allocate their money similarly for each class and what is good for all their investment. Seems to be good for all of their shareholders. If you have enough money, you may also consider the institutional shares. The fees seem to be a lot more advantageous. Also, most importantly, don't forget to read the prospectus, which has all the disclaimers and information that a robot would not be able to say in this video. Now, looking at these results more broadly, the Macquarie Tax-Free Minnesota Fund seems to be doing okay. The fund invests in Minnesota municipal bonds. The expense ratios are on par with the performance they provided. They don't change the investments that often, so it doesn't seem like a risky bet, and Minnesota is probably going to be there for a while. So thanks for watching. If you enjoyed, please subscribe, like, and comment.